All right, good afternoon, and thank you so much for joining us today for the 2021 legislative update, PPP loans, stimulus plan, vaccine policies, and tax savings. I'm Jackie Petroselli, the marketing specialist here at MP. For those of you joining us on a webinar for the first time, MP is a full-service human capital management services company offering a suite of products and services including HR, payroll, benefits administration, time and attendance, and compliance. We support our clients with cutting-edge technical solutions as well as proactive, reliable service and deep HR and payroll expertise. MP is wired for HR and helps clients succeed by tying their operations to their business goals. Your presenter today is MP's VP of Client and HR Services, Paul Corellis. Paul has over a decade of experience in the HR consulting space, working with businesses of all sizes and industries. Paul and his team of certified HR professionals at MP assist clients with compliance, training, and full circle HR guidance and support. And with that, I'm going to hand the mic off to Paul.
Thank you so much, Jackie, and thank you everybody for joining us. Looks like we've got a healthy group on live, and I'm sure several others will be listening to this recorded. So again, welcome. For those of you who have been to our semi-annual legislative updates in the past, we've been doing these for several years now. You will notice a little bit of difference with today's presentation. What we typically do in these are take a look at each of the federal agencies, what's going on at the Department of Labor, what's going on at the EEOC, National Labor Relations Board, OSHA, what have you, to talk about recent decisions by them, as well as kind of what's on the agenda and what's on the horizon. Obviously, for a multitude of factors, it's a little bit different this time around. So first of all, we're in the middle of a global pandemic. A lot of businesses are hurting, and we are fresh on the heels of a brand new relief package that was just signed into law a week or two ago. So we're really going to focus on that because there are a lot of really important and intricate programs and policies in there to help out businesses that are in need. And then also with the upcoming turnover at the Oval Office, it's really difficult to say, especially, I mean, just 2 days ago, right, we had a change with those runoff elections that could really dictate what kind of policies and agenda are set forth in Washington in the year to come. So first recommendation, if you are looking for that type of update, last month we did do a presentation about what we foresee happening in terms of labor policy in the Biden administration. So you can definitely check out the recording of that. We should have that available online. And then we'll also be doing follow-up and be doing another update once we get a little bit more idea of what the actual agenda is going to be and how that may impact businesses across the country. So with that, let's move right along. First, just a quick legal disclaimer. Hope that you get a lot out of today's session, learn a lot, are able to move forward with a game plan from here on how to best help your business and be prepared. This is coming from an HR best practices standpoint. I am not an attorney, so please don't construe anything we share today as legal advice. And when we're talking about matters like these, loans, grants, tax credits, things of that nature, it is always advisable, in addition to legal counsel, to make sure you're working closely with your trusted financial advisors, CPAs, and the like, as they're the real experts and really know your business and your finances more intimately than anyone else would. And then lastly, the information here is current as of January 7th. There is a slight update and some information that just came in that I'll share a little bit more about later that also is not quite incorporated in these slides just yet. So what we're going to talk about today, first we'll do a general legislative overview. We'll then talk about the PPP program and changes to that, both for the original round of PPP as well as the new one that'll be starting up. We'll also take a dive into the employee retention tax credit program, which could mean thousands and thousands of dollars in tax credits for your business if you are eligible. We'll then dive into the SBA 7A loan program, as well as some other programs, especially different pieces of the Corona Relief Bill that may be pertinent to businesses. And then throughout, we'll also try to give you a little bit of prediction of what's to come in 2021, or at least as best as we can tell at this point. And as time allows, we'll do our best to have some Q&A as well, understanding that there's still a lot that we're all kind of waiting to learn about as further guidance becomes published and available. All right, so let's kick things off with our legislative overview. So first, on the vaccine front, I wanted to talk about that first. It's a very hot topic now. A lot of people are wondering. And there was some guidance issued by the EEOC, Equal Employment Opportunity Commission, in regards to whether or not businesses could potentially have mandatory vaccination policies. And I wanted to share this first just because I wanted to make sure that there weren't any misunderstandings or someone read a headline about it and went forward in a way that wasn't protecting themselves liability-wise. So basically what the EEOC said was that there may be the chance, or there may be the opportunity for a business to have a mandatory vaccination policy, and that simply administering, and importantly, administering vaccines does not violate the ADA provisions of providing a medical examination, which was an important sticking point there. So they cleared that up. That being said, it's really important that you still proceed with caution if you're thinking about having a mandatory vaccine policy. I will say it's very likely to be much more permissible in a medical type setting if your industry is medical, hospital, doctor's office, even assisted living care, nursing, things like that, where you're able to make a much more logical and surefire determination in terms of the direct threat that COVID-19 and an unvaccinated employee might pose to your organization, to the general public, to your patients, customers, fellow employees, what have you. I will say there's still a lot to be sorted out with that, and a lot left up for interpretation with the EEOC statement that's been released so far. I'm sure that there'll be more to come on that. You got to be very careful, especially when it comes to determining what is or isn't a reasonable accommodation, because it's tricky with unvaccinated folks. Is it reasonable to have them working a different shift or in a different area away from people? What are the grounds for a reasonable accommodation? Usually it's either a medical condition or allergy that prevents someone from getting a given vaccination, or a religious objection. So those are still very much in play, but really it's just important that you don't take the EEOC's guidance as a blank check to go ahead and just automatically come up with a very strict mandatory vaccination policy. You really have to do it on a business by business and really a case by case basis. And then also you got to imagine that states will weigh in with their own policies on this. So depending on where you're operating, you'll want to keep an eye on that as well. So definitely consult HR professionals, if not legal counsel, as you start to develop your mandatory vaccination or whatever your vaccination policy might be. Over at the Department of Labor, they just, I believe it was yesterday, published the final rule regarding independent contractors. So this is something that they had been working on for quite a while. They really wanted to get this final rule published before the change at the White House. So that did go into place yesterday. I believe it's published in the Federal Register today and will take effect 60 days from today, so March 7th. The big thing it did was really shift the focus and shift the determination at the federal level of determining who's an independent contractor and can be paid as such, and who's really an employee and needs to be treated as a W-2 employee. So what they did was boil it down to two core factors in what they're calling the economic reality test. So the two most paramount things, again, at the federal level, when determining whether a worker is an independent contractor or an employee, is first determining the degree of the worker's control of their work, in terms of when to report to work, where to report to work, how the job is done, things of that nature. And then the second key factor is that worker's ability to realize a profit or loss. So if you have someone that you're paying for a project, an example of this would be if they were doing the project and they're in charge of providing the materials, and let's say they're doing a construction project and mess up some of the lumber, or they take longer than they anticipated, and you're just paying them a flat rate for the job, you're not paying them by the hour. In that case, they would realize a loss, versus if they're selecting their own buyers for the supplies and able to finish it ahead of schedule, then they might realize more of a profit, being able to move on to the next project. So those are the two real key factors now under this DOL final rule starting in March, unless the next Department of Labor intervenes and overturns this. They did say there are other considerations that are factored in, but not to the same degree that those two are. And those other considerations are the level of the worker's skill required to do the work, the permanence of the relationship between the company and the worker. Are you just hiring them for a project or for a short period of time, or is there kind of an indefinite working relationship between the two? And then what's called the integrated unit of production. So is this worker part of a department of employees? How integrated are they with your actual W-2 employee staff or a department? A really interesting thing, and something that really hadn't been on anyone's radar and was always a no-no when it came to determining independent contractor versus employee, were benefits. So anytime previous to this that an employer provided any sort of perk or benefit or reimbursement for benefits to a worker, that was generally almost automatically a determination that that person was most likely an employee. Any type of tie into benefits would seemingly create that employee-employer relationship. What this ruling did was definitely leave the door open to that. So they mentioned that providing compensation to a worker for their own benefits that they get doesn't necessarily disqualify them from being an independent contractor. They did draw a little bit of a line in the sand in saying that if the workers were participating in the same benefit plans as the employees that the employees have access to, that would be a violation in terms of the independent contractor to business relationship. But they did definitely leave the door open for some sort of benefit arrangement, and I'm sure insurance and benefit experts out there will be able to get creative with it, but that possibility is now there. Again, this does take effect March 7th, and really important to note here is that, like any labor law or any ruling from the Department of Labor, these are always subject to rules and laws at the state level, and they made it clear that this one was no exception, that state law and many states have more strict independent contractor tests. This one would be subject to that as well. So if you're in a state with more strict independent contractor laws, you'll still go by those state rules. This is strictly for states that follow the federal guidelines. So Department of Labor has been busy in these waning months of the Trump presidency. A couple other memos that they released over the last couple of weeks. One had to do with electronic notices and postings. So where so many businesses have gone completely remote and shuttered their physical offices, people were wondering, how do they still stay compliant with requirements for posters and postings that need to be displayed in the workplace? So they did give official permission for workplaces that are shuttered and other similar telecommuting arrangements that within certain rules, as long as it's made accessible, either sent via an email or made available on an intranet or otherwise accessible to employees, and not just a one-time it's there and then it disappears, that electronic posters and other required notices are permissible to be distributed electronically. Another COVID-influenced memo from the Department of Labor had to do with telemedicine, which has obviously become more popular as people more and more look for alternatives to going in person, especially for medical services. So within the Family Medical Leave Act, or FMLA, there are certain provisions or certain times where there's requirement for an in-person visit to certify someone's eligibility for FMLA leave. And what the memo clarified was that telemedicine, as long as it meets certain guidelines, is permissible and can count as an in-person visit. They did make it clear that simply a phone call to a doctor's office or email or something like that does not count. Instead, they really say in just about all circumstances, it needs to be a video call or involve video of some point, of some part, and be an interaction between the employee and the medical professional to really count as an in-person visit. But it did open up the door for that to be counted as an in-person visit. And then finally, you may have seen, if you're on our mailing list, you likely received a communication about this in the last few days. But as part of the new bill, there was a optional extension of FFCRA into this year. So to be clear, FFCRA was the leave available 2 weeks for employees for COVID-related reasons, as well as 10 weeks available for employees who have to care for children whose school is closed or gone mandatory virtual, or daycare, things like that. That by the bill itself, it was scheduled to end on December 31st. They have extended that through the end of March. But again, employers are still eligible for that credit. They can continue to grant FFCRA leave to their employees this quarter, but they are not required to like they were before. So this is now optional for employers to observe and allow. Obviously, you want to be consistent with it. You don't want to pick and choose who you're giving FFCRA leave to and who you aren't. But it is up to you as a business to decide whether or not you want to continue offering that program. All right, so let's get into some of the fun stuff here. Let's talk about PPP. So for the real nitty-gritty on the PPP program, especially the first iteration of it, again, I do recommend you check out some of our recordings. I'm sure we'll be doing PPP-specific content where we devote an entire hour to PPP. It certainly deserves it and will be coming. But let's dive right in and first talk about some alterations to the overall PPP program that came about as part of the coronavirus relief bill. So first, and this is a big one, this one was kind of flying under the radar for a lot of people, but I think would have really started to hit the fan as businesses were filing their corporate taxes this year. Earlier, or last year rather, the IRS had made some statements stating that expenses that businesses would typically deduct for tax purposes, all kinds of general business expenses that employers don't even think twice about deducting. IRS came out and said that, at least as of that time, they were not going to allow those expenses to be deducted if the employer used forgiven PPP funds to pay for those expenses. So that was going to cause quite a ripple effect throughout the business community. Definitely result in some higher tax bills, and was a scary notion for employers that had caught on to that. Fortunately for those businesses, this new bill makes it very clear that whether or not an employer's deductible expenses were paid with PPP funds or not, and whether those funds were forgiven or not, they are still able to have those same deductions on their taxes. So that's a huge deal. There was also some clarification about the emergency injury disaster loan program. So many businesses were able to take advantage of grants under the EIDL program and the SBA, which provided up to $10,000, in many cases, $10,000 grants. Some of that dried up after a while. One important note, those are open again. So part of the funding under the new bill provided additional money for EIDL grants. So if you haven't gotten one yet and you feel that you might qualify, definitely look into that. But there was a bit of a sting with it when people took EIDL grants and then also did the PPP program. When they went to file for forgiveness, if they have already, they learned that the amount of that grant was reduced their forgiveness on their PPP loans. Again, something that was a big bummer to the business community. So as part of this Corona relief bill, they made it clear that EIDL grants will no longer count against forgiveness. That won't have to be paid back as part of the PPP forgiveness program. And in addition, they're creating some guidelines for businesses who already applied for forgiveness and had that EIDL money taken away from that they'll be able to recoup that. So really good news there. Other really interesting and important features of the changes to the PPP program, they added this huge list, as you can see here, of additional covered expenses. So allowable expenditures that you can use PPP money for. So it's important to note you still have to have that 60%, 40% split, where at least 60% of your PPP money is going towards payroll costs. But the list of other allowable expenses is quite large now. So those additional covered expenses include many more types of insurance. So previously it had really just been health insurance costs that have been allowed under PPP, but that now includes life insurance, disability insurance, dental, and vision as well. They're also allowing covered supplier costs for goods that are essential to a given business. They're also allowing PPP funds to be used towards worker protection expenditures. So that can be everything from PPE, masks, gloves, things of that nature, physical barriers, plexiglass, partitions, things like that, air filtration systems, when a business has to set up health screening at their factory or something like that, that falls under the worker protection expenditures as well. They're also allowing businesses to claim costs that were as a result of property damage from public unrest. So some recent protests and riots in different parts of the country resulted in property damage for businesses. So to the extent that that wasn't covered by insurance, they can claim the remainder of that and use PPP funds for those. And then lastly, and something that was great for us to hear, as a HCM, HR, and payroll provider, they are now allowing also covered operation expenditures, including software and cloud computing costs for things like payroll, human capital management, HR services, accounting services, sales and billing, and things like that. So again, a great new list of allowable expenditures for PPP funds. When it comes to guidelines, and we're going to talk a lot more about PPP in a moment, these are all really dictated by the SBA, the Small Business Administration. They just released some guidelines and some rules late last night and early this morning. It's over 80 pages of content. We have not completed our review of that at this time. So we are going to be sending out a blog post following up on this webinar, as well as an ebook and more information about the program. And in those documents and further communications, we will include further clarification on anything of relevance when it comes from the SBA and their interim final rule and their guidance for businesses regarding the PPP. So some other big changes with the PPP program. They've confirmed and made some changes to the covered period and flexibility within that. So you see here 8 to 24 weeks, and a lot of people think, well, wasn't that always the case? I could choose 8 weeks or 24 weeks. Yes and no. So for early adopters of the PPP, they'll remember that they originally were limited to 8 weeks, and then they made some modifications to the law, which then allowed for businesses to use a covered period to use the funds over 24 weeks instead. But people that took those loans, once that piece was enacted, did not have the option of using 8 weeks. They had to use 24 weeks. So this gives those folks the option of using 8 weeks instead. And this also allows people to use any increment of time between that. So 12 weeks, 18 weeks, 20 weeks as well. They've also greatly simplified the forgiveness process for PPP loans that were less than $150,000. That form has not yet been released. I did not see that in the items issued by the SBA last night. It is estimated to be released within the next couple weeks by January 20th, but it's going to be a one-page document where a business can certify and attest that they use the funds appropriately. They'll also have to include the estimated number of employees that they were able to retain by using the PPP program, the estimated portion of the loan used for payroll purposes, as well as the total amount of the loan. There is some bad news for early forgiveness filers. So if people already have applied for forgiveness and want to take advantage of some of these new rules, with the exception of the reimbursement for the EIDL grants, most of these things are restricted to folks who have not applied for forgiveness yet or not received their determination from the SBA. But for those who haven't, there is the opportunity for folks who, for whatever reason, didn't take the full amount that they were eligible for. They can go back and amend their original PPP loan application and get additional funding through that. The original PPP program, or for folks who are applying for the first time who didn't take advantage the first go around, the guideline for that is that you had under 500 employees and suffered some sort of loss in revenue or business as a result of COVID-19. Now with Paycheck Protection Program 2.0, this is a brand new round of funding. They've allocated $284 billion to the second round of PPP, the redraw. The eligibility guidelines are different this time around. Eligibility for the second round, and so this is for folks who did take a PPP loan already. For PPP 2.0, you have to have fewer than 300 employees. And you also have to be able to show 25% or greater gross receipt reduction in comparable quarters from 2019 to 2020. And the method for calculating that was released by the SBA, again, late last night, early this morning. So we'll have more details on that in future communications, but that's the general rule. In addition, they've added some additional entities that can apply for PPP loans, including certain nonprofits that fall under 501c6 with certain limitations. This opens the door for chambers of commerce and some other nonprofit organizations similar to that, as well as local media outlets, so local television stations, radio stations, newspapers. A lot of those companies had been initially excluded because of their ties to a larger affiliate. So say a news or a television station that's an NBC affiliate or an ABC affiliate. Because of the way the original rules were written, they were often excluded, but this opens up the door for them to get PPP funding. In terms of what applicants can receive for PPP loans, it's either going to be the lesser of $2 million, so that's kind of the cap this time around, or 2.5 times your average monthly payroll expenses from either the calendar year 2019, or you can choose to use the 12 months prior to loan origination, so whichever is more advantageous for you. If you're in the food and accommodation services industries, you're allowed to request more under the PPP program. Instead of 2.5 times your average monthly payroll, it's 3.5 times average monthly payroll. In order to qualify for that, your NAICS code has to be one of the 72 series of NAICS codes. So if you're not familiar with that, check some of your tax records or check with your accountant. They should know what NAICS code you fall into. Those are basically the definition of what industry your business is. Some other details on the Paycheck Protection Program. As far as I could see in terms of what the SBA had released as of noontime today, when I last checked, the actual application for applying had not been made available just yet. When it is, you will have until March 31st to apply. We don't know, obviously, what the popularity will be for this program. If you remember the first time around, the original round of funding for the first PPP program was exhausted very quickly within a matter of days. And then they added some additional funding for it, and that money ended up going unspent. So the program PPP 1.0 actually expired before all the available funds were used. That said, this opens up the door for many businesses that previously participated. And again, there is $284 billion allocated to this. So if that is exhausted prior to March 31st, then obviously the application deadline will be moot. Lenders do have to reapply and be reapproved to be a PPP lender. It's unclear at this time, depending on their experience thus far. Some lenders who participated in the original PPP program may decide not to participate this time around. I know several of the larger banks, Bank of America, JP Morgan Chase, they have indicated that they are going to participate again. But certainly check before you go too far down the rabbit hole to make sure that the lender that you want to work with is going to be participating this time around. If for whatever reason your experience with your lender on your first PPP loan was a less than pleasant one, it is important to note you are not required to use the same lender the second time around. So you do have options there. And for the lenders themselves, there was some really important language in the legislation that they had been asking for, providing a safe harbor and a hold harmless for them in terms of if they're getting information for loan forgiveness or to originate loans as part of this program, they did not want to be liable if someone's fraudulent or untruthful or otherwise taking advantage of the system. The bank did not want to be implicated in that. So as part of the coronavirus relief bill, there was safe harbor language added in there to protect lenders from any sort of litigation or charges as a result of the action of a borrower. Okay, so I'm just going to take a quick moment before we dive into tax credits and all that fun stuff to take a look at the questions to make sure we have some time and get to these timely. If your original loan was over $2 million, can you apply again? Yes. So they're wiping the slate clean. As long as it's been 90 days since you received your PPP loan, you can apply for up to $2 million. Yes, if you meet the other eligibility requirements. PPP 1 generally allowed eligibility up to 500 employees. You said this one is 300 employees. Is that a hard cap? As far as I know, again, we'll be reviewing the SBA guidance that was just released. But based on the language in the bill itself, it does seem like, yeah, that is a hard limit at 300. Let's see. Great question. What if you opened your business during 2020 and you have no comparison to 2019 revenue? They did take that, they did factor that in. You do have to have been in business, I believe, prior to February. You do have to be in business as of February in 2020 to be eligible, is my understanding, but they did release guidelines for how to go about calculating this. We can send that to you separately. For PPP, what if a business applied before and was denied due to the funds running out? Are they not eligible? No, you would still be eligible. As long as you otherwise meet the eligibility requirements, you can go ahead and apply this time around, yes. We have questions about some of the software and cloud computing expenses and what qualifies and what doesn't. I'm counting on the SBA, either through their FAQs or through the guidance that just came out, to provide some clarification there about what the limits are to, industry-specific software and things like that. So we'll have further guidance on that as soon as we can. Can covered operational expenditures be used in determining how much a loan businesses are eligible to receive? Most likely not, again, unless there's a big surprise in the SBA guidance that just came out. It's really covered payroll costs that determine the amount of your loan size. So for the sake of time, I better move on to make sure we cover everything today, but these are some really good questions. Keep them coming. We'll do our best to get to as many of these as we can. Lots of questions about changes, things like the expanded insurance types. Can we use PPP $1 on those or just PPP $2? There's been some back and forth as people analyze the bill itself. I'm confident that the SBA addressed that in their guidance that came out this morning. My interpretation of it was that for many of those, those would apply to PPP1, but please wait for our further guidance on that as we analyze the SBA guidance from this morning. All right. Okay, moving on. Let's talk about employee retention tax credits. So as I said at the top, this is potentially an opportunity for businesses to score huge amounts of tax credits for their business. And it's really, if you recall, this is something that was introduced as part of the original stimulus plan, but many employers did not take advantage of this for one main reason, because they said that if you took advantage of the PPP program, you were not eligible to do employee retention tax credits. So as a result, many businesses discovered or felt that the PPP was a much more beneficial program for their business and went with that instead. But like with many things, this new bill that was just passed changes the rules, flips that all on its head. So this is really kind of three programs in one. So first, let's kind of go in chronological order here. Let's talk about the changes to the 2020 Employee Retention Tax Credit. So the big and the really significant change here is that the bill now states that PPP recipients are no longer excluded from this program. Huge. So just because you got a PPP loan, you are no longer excluded from the 2020 Employee Retention Tax Credit. One really, really important caveat, and it's very important that you hear this, is that although they're allowing it, they are at the same time saying that you cannot apply the credit, and it's based on wages, as we'll talk about in a second. You cannot apply the credit to wages that you used for given PPP funds on. So, for example, if you got a PPP loan that went from August to October and used those funds to pay wages for your employees, and that's what you have on record as part of your forgiveness application, you could not claim ERTC for that same time period for those wages that you use PPP funds on. So what you're going to need to do in many cases is be really strategic about determining what your covered period is, what your retention tax credit period is, to make sure you take full advantage of all the programs and all the proceeds available to you. So under this original plan, gross receipts had to show a decline of 50% or greater, or that for the quarter that you're claiming the credit, you had a full or partial shutdown in business due to a governmental order. So things like a stay-at-home order, or for a restaurant, it could be partial in that you were forced to only do takeout. So your wait staff and your in-person dining was affected. That would count. 2020 ERTC was also tiered a little bit differently, in that if you had fewer than 100 employees, all of your workers paid, you could claim the retention tax credit for. If you were over 100 employees, you could only claim the retention credit for employees who you paid but who did not actually perform work. So if you had a shutdown order and you sent everybody home and let them stay home and not work, and this does not include working from home, this would not qualify. But if you're simply paying them to stay home rather than having them collect unemployment, for those larger employers, you could claim the credit for those wages that you paid. And then the amount of the credit itself was calculated as 50% of each eligible employee's wages up to $10,000. So basically a $5,000 credit per employee for the year in total. So that's that program in a nutshell. And as it was written, that originally this employee retention tax credit was for 2020 and 2020 only. The new bill not only allowed that to go retroactive, but it also opened it up for the first 2 quarters of this year as a separate program. So if you're eligible, you can do that 2020 employee retention tax credit, and then also take advantage of it for the first 2 quarters of this year. So some key differences when it comes to the 2020 program and the 2021 program. For the 2021 program, the year-over-year gross receipts decline only has to be 20% rather than 50%. It's also open to employers with fewer than 500 employees rather than the $100 threshold. And instead of 50% of wages up to $10,000, it's now 70%. So rather than a $5,000 credit per employee, you're able to get a $7,000 credit per employee. And that's per quarter, not per year either. So you can get up to $7,000 in tax credit for quarter 1 and $7,000 in tax credit for quarter 2 as well. So again, some really significant credits here available. Much like the SBA, we are leaning on the IRS for some guidance on some really key questions when it comes to these programs. And that guidance, at least as of noon today, had not yet been released by the IRS. One of the really important ones is in terms of claiming this retroactive 2020 credit, will you need to amend a previous quarter's 941 tax form to claim the credit, or will there be a mechanism or a way to claim that on a current 2021 941 form? So that question has not yet been answered, but as soon as we know, we'll be sure to let you know. All right, I know we got a litany of questions there too, so let's take a quick look at those. Okay, if you didn't take this credit in 2020 because you had a PPP, how can you claim it now? Further guidance on that is coming. What I would suggest doing for now is doing some of that strategy to determine which quarters or which time periods you can claim the credit for that doesn't overlap with your PPP loan. So now's a good time to strategize and kind of figure out, get your ducks in a row, and then once the actual mechanism for claiming it is into play, you'll be ready to go. How are gross receipts defined? That's a great question. We can provide that to everybody. It's somewhat of a complex calculation that I won't do any justice to if I try to read it out off the top of my head. Is the 2020 ERTC by quarter as well, or for the full year? So that it's for the full year. It was just it was a one-time for people that did take advantage of it, that didn't do the PPP program. For the entire year, they were only eligible for $5,000 in credit per employee, regardless of how many quarters they were affected. Let's see what else. Are eligible employees still the individuals who are paid but not worked? No. So this is going to count for employees who are paid regardless of whether they worked or not. So should be quite a few eligible employees here. What if you had a 24-week PPP covered period but only had the loan that covered 9 weeks? In that case, again, pending IRS guidance on this, if your forgiveness application shows that the wages or the loan only covered 9 weeks of wages, you should, and again, I'll say should, and we're speculating here, and I hate to do that because both the IRS and the SBA have been full of surprises as they further their guidance on these stimulus packages over the last year. But if you can create a line of demarcation between when your covered period was and when you're actually paying wages for and using PPP funds to provide wages, you should be able to still use some of that period for the tax credit. If you have less than 100 employees, do you still have to have a 50% decline in revenue for the year in 2020? So yes, either that decline or proof of a interruption in your business, a full or partial shutdown in your business as a result of a government shutdown order. In terms of eligibility in regards to PPP 2.0 and the employer retention tax credit for 2021, that's a great question. I'm hoping that that's addressed in the SBA guidance that came out. Again, we'll be sure to let you know. That's a question we're wondering as well. Let's see here if there's anything else that we can answer on the fly. Okay, some of these are a little business specific, but we'll do our best to address these offline. If we are not eligible to take advantage of PPP 1.0, are we able to use the retention forgiveness for 2020? Yes, as long as you meet the requirements of the program, definitely. All right, so we'll get to a couple more of these at the end as time allows, but again, I just want to make sure that we get a chance to get through the full presentation here as we're running up on our limit here. So, other programs and provisions. There is another SBA loan type that is available for businesses. It's called an SBA 7A loan. It can provide some really great funding. It's intended to be used towards working capital, inventory costs, equipment costs, and business acquisitions costs. These loans are available in the amounts of up to $5 million. The eligibility requirements are you have to have 500 or fewer employees or $7.5 million or less in annual receipts. One of the nice things compared to some of these other programs that we've talked about is that you don't have to show proof of losses, lost revenue, or losses in gross receipts to qualify for these loans. And then in addition to the loan programs themselves, they're also, as part of the coronavirus relief, giving some loan relief in the form of premium payments towards a loan on behalf of the SBA. So there is up to $9,000 a month per business available in repayment assistance. For new loans, they can receive up to 6 months of loan assistance, up to that maximum each month. And for select industries that they've identified as especially hard hit, restaurants, performance venues, things of that nature, they may qualify for up to 8 months of payments and relief. Speaking of entertainment venues, the new coronavirus relief bill also provided grants of up to $10 million for performing arts venues, theaters, and businesses of that sort. I know not many took advantage of it, but some businesses did take advantage of the employee Social Security tax deferral, where employees were able to defer payment of their Social Security taxes. The deadline for repayment on that was extended to the end of this year, so it provides a little bit more time for employees to pay back those Social Security taxes that they deferred. They've also temporarily increased the deduction for business meals, provided they're coming from a restaurant, from 50% to 100%. And I also encourage you to check out at the state level what grants might be available to your business if you're looking for additional sources of funding. So for instance, here where I am in Massachusetts, there are grants of up to $75,000 available to businesses in certain industries, but the deadlines can often be short. So the program here, the application deadline is the 15th of this month, but please do check around within your states where you operate to see if there may be similar programs available as well. Oops, looks like we got a repeat here. So a few of these bullets repeated, I apologize for that, but new content on this slide revolves around FSA relief. So for businesses that offer flexible spending accounts, there are some great flexibility, no pun intended, in terms of how FSAs can be utilized during this pandemic. So in each of these changes, these do require an amendment to the plan itself. So as the employer, if you're interested in taking advantage of any of these, you will want to contact your FSA provider and ask them to amend your plan accordingly. But these are some really nice features. So they are giving employers the option and the availability to allow FSA participants to roll over any 2021 plans for the entirety of 2021 without any limits other than the statutory FSA limits, as well as leftover funds from 2021 into 2022, and also allowing grace periods, which are typically capped at 2.5 months. They're allowing businesses to increase the grace period on their FSA plans for an entire 12 months. Employers also have the option under FSA now to allow a spend down for terminated employees. So that used to only be restricted to dependent care FSA, unreimbursed medical FSA, typically, except for COBRA situations, would not allow a terminated employee to continue to spend down their balance, but employers may now allow that. They've also ticked up the eligibility for dependent care FSA from 13 to 14. So if you have kids in eligible daycare, babysitting arrangements, day camps, and things like that, they are covered for an additional year now. And they've also opened it up to mid-year changes. So FSAs, for those of you who aren't familiar, have typically run very similar to they run under Section 125, but very similar to pretext health programs where you have to have a qualifying event, a birth, a marriage, a divorce, and the like to make changes to your FSA election. But given everything that's going on, they are giving the employers the ability to amend their plan to allow for mid-year changes for any reason, which again is a great thing. So whether it's PPP, employee retention tax credits, or anything in between, please know that MP is here to help. We do have services available to help businesses analyze their potential eligibility for PPP, for employee retention tax credits. Please let us know if you are interested in our assistance with any of those things. And then let me take a look and see what we have for final questions. If we have a couple I can answer before our time is up here. Let's see. Scroll down. Are the loan forgiveness guidelines for the second round of PPP expected to be the same? If so, are the proceeds and eligible expense taxability treatment expected to be the same as those in the first round? So yes, again, provided there's no surprises in the SBA guidance that was just released today, the forgiveness guidelines should be the same with the exception of those additional categories that you're allowed to use the funds on. You do, again, just want to make sure you keep that 60-40 payroll to other expenses ratio. For FSA mid-year changes, does that mean once at the 6-month mark or any time during the year if we make the amendment? So if you make the amendment, that would mean that it would be any time during the year. It wouldn't just be at the 6-month mark. If someone, again, if you allow it, if someone is 10 months into the plan come October and says, I was really expecting to be able to get this procedure done, but my doctor's office is still not having elective procedures, so it got put off, and I set this money aside in my FSA for it, and I won't be able to use it. Can I reduce, what have you, or I need to increase because of a procedure that has now been granted? Then yeah, it wouldn't be a limit to only once at the 6-month mark. It would be any time. All right, let's see if we can answer one or two more here. If someone goes out on COVID sick pay, the payroll company reduces our tax liability. Is this something we'll have to pay back, or is this part of the stimulus package? Great question. So that is not something that you'll have to pay back. That all falls under the Families First Coronavirus Relief Act, FFCRA. So the way that works is you pay the employee their wages, but then you receive that tax credit that covers all of their wages, all of their taxes, and as well as any health insurance costs or things like that. So you should be made whole via that tax credit and that reduction in your tax liability, and that is not a loan. That is simply relief for you, and you will not have to pay that back. Great questions. Let's see. Would you please send a link to the SBA update for this? We certainly can. Again, it's very similar to a bill where it's 80 pages and pretty monotonous, but yeah, I would be happy to share that. No problem at all. Definitely some questions on gross receipts, so we'll make sure that we address that in our follow-up in terms of the calculation there. But I think we're just about at 2 o'clock here. So with that, I'll hand things back over to Jackie. Thank you guys so much.
Awesome. Thanks so much, Paul. Thank you to all of you for attending this webinar. As Paul mentioned, we are currently offering services to help businesses claim employee retention credits and maximize their PPP funds. If you'd like to learn more about how we can help you with any of those topics and more, you can email us at marketing@mp-hr.com. If you have any further questions, please send them to marketing@mp-hr.com. We hope you stay healthy and have a great day. Thank you.